Good evening, everybody. It is May the 8th, and I hope you all are having a wonderful weekend and a happy Mother's Day to all of you that are watching. But we've got a lot to talk about because last week was extremely volatile, and I'm not quite sure it's going to be any better this week. So let's get started. Let's talk money. Let's talk Sunday market preview. All right, everybody. So, as usual, first thing I want to do is I want to thank you all for tuning in today on this wonderful Mother's Day. I know it is another late video, just like last week, so I do apologize for that. However, if you like what I have to say, please feel free to like, share, subscribe, and most importantly, comment. I'd love to hear what you have to say about the markets last week and even going into this week. Love to have that open discussion and dialogue with everybody. But let's get started and talk about this week past, because we saw some incredible volatility right throughout the week. We saw the markets run up 1,000 points after the Fed, then down 1,000 points. Yes, or a Friday, it wasn't really a horrible day at the close, but it was still quite volatile all throughout the day. But the one thing I will note here is that Friday's close compared to Monday's open, we were almost net neutral, so wasn't really a heck of a lot of change, although it was a little bit to the red compared to Monday's open, but overall, pretty well flat right across the board. Now, the 10-year yield did jump up a little bit as expected. We did expect it to go over 3% as we were anticipating that, just due to the increasing yield, to the increasing interest rate. So the yields are pricing everything in, and the markets are also pricing it in, which is why we saw a lot of fear trading happening on Thursday and Friday. Primarily fear because of interest rates continuing to rise, primarily because of inflation continuing to rise, and a lot of people out there are starting to price in a 75 basis point increase in June, even though we got a fair amount of assurances from Powell, just indicating that a 50 basis point will probably be the max that we will see. Some people are even saying that we'll be up at 2% worth of increases by the end of the year. Not sure that we're going to see that. I think just based on the economic news that's out there and really based on just a lot of the technicals, I really don't see that happening unless it's a deliberate attempt. And I'm not going to get into that kind of conversation because I do believe a lot of this, if not all of this, is very deliberate. We could be moved along into a recession because they know that interest rates alone at this level, even if they raised it 5% this year, will actually do very little to inflation. In fact, these small increases, even up to 2%, will accelerate inflation. And I've been saying that week in and week out. That is exactly what's going to happen. And we're actually going to see core CPI and CPI get reported on Wednesday this week. And they're anticipating an 8.5%. We'll see what really happens. Keep in mind, these are really not the real inflationary numbers. We really should be looking at the shadow inflation. But that's a whole different conversation altogether. Now, let's look ahead to this week, because if we take a look at what's going on tonight through the futures market, we can already see that the futures market is still pricing in a lot of fear and a lot of these potential increases in interest rates, especially the June one. If we're looking at the markets right now live, the US 30 is currently down 417 points, at least the futures are already this evening. Now, I have seen this a number of times throughout the last little while, and what ends up happening is the markets do change throughout the night, oftentimes with the US 30 pulling back quite significantly off the extremes. But that being said, if this momentum continues into the morning, well, we can expect a pretty rough day tomorrow and start to the week. But let's try to keep it a little bit lighter. Now, if we take a look at other areas this week, I do anticipate that we're going to see an additional push here in utilities and crude. Crude supply continues to be an issue. We do have crude reports later this week as well. But I do think we're going to have some issues with crude here coming forward. So you can expect crude to continue to inch higher. I know it hasn't gone through that same parabolic spike like we saw it hit $125 a few weeks ago. But I do expect it to continue to march higher overall very slowly, which is a good thing for those of you that are bullish on crude. Taking a look at gold and silver this evening. Gold and silver are currently trading in the red with the vast majority of commodities this evening. So I anticipate that might very well carry over into the morning, which is partially as a result of the increasing US dollar, because the index is moving higher, sitting over 103 right now. I think that's going to essentially suppress gold and silver a little bit further, keeping in mind that I think eventually the upwards momentum of the precious metals will start to march higher, but that is still a very volatile market in itself. But let's have a look at the rest of the indices and the rest of the markets, because economic news this week will make a difference. Tuesday filled with FOMC, and we also have nothing too important but short-term energy looks. And as you know, I am very bullish on short-term, actually on energy in general. I do think that the energy and utilities industries will continue to march upwards. And we'll talk about hedging momentarily. Taking a look at the rest of the week, we have crude inventory on Wednesday. In addition to the CPI numbers, Thursday, jobless, PPI are going to be reported, and I think that those are also going to be very impactful on the market. So expect additional volatility throughout the week, but I do think this volatility will be short-lived. But let's have a look at what you're going to do with your portfolio going forward. We really need to have a chat about this because a lot of people are worried. There is a lot of fear trading. I've gotten a lot of emails and a lot of personal messages on other media just asking me about what the portfolio should look like, if we've already passed the big one or if we're approaching the big correction. I don't think we're approaching the big correction. I don't think we're there yet. And again, what I always take a look at is the 10-year yield. As long as the 10-year yield continues to be relatively stable without any extreme spikes, then you can anticipate that the markets are not going to crash. Remember, the indicator will be sudden rises in the 10-year yield on multiple days. That will be a trigger. That will be an indicator for you to start to move your money from risk on, totally out of risk on, and way into risk off. Now, right now, the 10-year yield is stable. Friday finished relatively stable. I do anticipate that the 10-year yield will remain above 3%, but I don't see it really moving above 3.75, but I wouldn't be surprised if it hit eventually 350. That being said, let's take a look at cryptocurrencies this week, because cryptocurrencies continue to bleed out. Bitcoin currently sitting at just above 34,000. Ethereum sitting very low as well, around 2,500 that is. I'm not really seeing a lot of positive momentum here. Keeping in mind, I do anticipate in the long run, cryptos like precious metals, like utilities, like commodities will have a higher potential for growth just based on the rest of the market and the fear, and not to mention inflation. I think a lot of people are going to pull money out of equities and eventually get into cryptocurrencies, which will cause the actual size of the crypto market to continue to balloon. Now, that being said, this week, I do think cryptos will continue to see more red, and I'd like to see crypto actually balance out here. I'd love to see Bitcoin try to settle here around 34,000. That would be great for Bitcoin, especially if it can find some support along with the rest of the market. If there is some support that'll develop, say, by midweek, that'll be absolutely fantastic. However, I really do think CPI numbers and eventually PPI numbers will play a factor in additional fear in the market. So keep that in mind throughout this week. A lot of potential volatility is going to come in. Eventually, it'll start to smoothen out, but for now, expect a lot of volatility. Now, when it comes to your portfolio, you really need to be comfortable with what you have and understand the design of your portfolio. If you are concerned, I've said this already, I said it during the week, if you're concerned about your portfolio and you're concerned about the way the market volatility is, don't hesitate to pull your money back out from risk on to risk off or completely out entirely. It's totally fine. You have to be able to sleep at night. If you find that your portfolio is a bit too aggressive or a bit too volatile, then you must do what's necessary for you to help you sleep at night, especially if your portfolio is essentially money that you really can't lose. You have to allow it some give, but if it's at the point where you're afraid, then you really should get out of the market and perhaps position yourself accordingly for the next re-entry. Or alternatively, perhaps switch some of your portfolio around to prepare for some hedging. Now, that means that you take your money from risk on, so equities that are volatile, growth based, and you can essentially get into equities that are more defensive, which is absolutely perfect. So you get into utilities, consumer staples, for example. These are all areas that will prevent, or that are essentially protected during a downside of the market, or even in some cases, and I hesitate to use this term, but it has been thrown around quite a bit, recession-proof industries. And I think that would be absolutely great to add to any portfolio in general. Keep in mind, a little bit of cryptocurrency doesn't hurt. A little bit of precious metals, commodities don't hurt. They all play an important factor in everybody's general portfolio. Just make sure that you have the appropriate balance for your portfolio and your risk tolerance. But overall, make sure that you do have some degree of confidence or comfort in your portfolio, regardless of whether it's high risk or low risk. It really won't make a difference if you can't sleep at night. So that's an important factor to play there. But otherwise, like I said, add a little bit of precious metals, add a little bit of potential of commodities there, and you may find that it's going to help your portfolio a little bit, especially if you're getting into some of the recession-proof type of investments, including consumer staples and utilities. But that's pretty much it, everybody. I think the video has gone on a little too long. But otherwise, like I said, I hope you have a wonderful evening. If you do like what I had to say, again, hit the like, subscribe, and feel free to comment. Would love to hear what you have to say. That's it, everybody. Have yourself a wonderful end to your weekend, and I will see you tomorrow at the opening bell.